Today, we begin our analysis of Broadcom, a global technology leader in semiconductors and infrastructure software, playing a critical role in the AI and data center ecosystem. In Q4 FY25, the company reported $18 billion in revenue, up 28% year-over-year. Semiconductor revenue reached $11.1 billion, driven by strong demand from AI and hyperscale data centers, while infrastructure software generated $6.9 billion, supported by a stable subscription model following the VMware acquisition. Operating income totaled $7.5 billion, with operating expenses of $4.7 billion, resulting in net income of $8.5 billion and an industry-leading net margin of 47%. Next, we will look at Broadcom's revenue trends by segment over recent quarters. Quarterly revenue increased from approximately $6.7 billion to $18.0 billion, representing a 24.9% CAGR, highlighting strong overall growth momentum. Semiconductor revenue rose from $4.9 billion to $11.1 billion, delivering an 18.7% CAGR, and continues to show an expanding trend, driven by strong demand for AI chips, connectivity solutions, and data center infrastructure from leading technology companies and hyperscalers. Meanwhile, infrastructure software revenue recorded a significantly higher 39.9% CAGR, growing from $1.8 billion to $6.9 billion, supported by the $69 billion VMware acquisition and the transition to a subscription-based model, with VCF, VMware Cloud Foundation, positioned as the core platform. We now turn to Broadcom's semiconductor segment, with a focus on AI and order backlog. In Q4 FY25, AI-related revenue reached approximately $6.5 billion, accounting for 58.5% of semiconductor revenue, with AI's market share continuing to expand and its contribution becoming increasingly significant within the revenue mix. Customer-accelerated business more than doubled year-over-year, as Broadcom added a new XPU customer, secured a $1 billion order for delivery in late 2026, and received an additional $11 billion follow-on order from a key strategic customer during the quarter, bringing the total backlog of this segment to approximately $53 billion. In addition, AI networking backlog exceeds $10 billion, led by the Tomahawk 6 switch with 102 Tbps bandwidth. Overall, AI-related backlog now exceeds $73 billion, representing nearly 50% of Broadcom's consolidated backlog, and is expected to be recognized over the next 18 months. Meanwhile, non-AI semiconductor revenue totaled $4.6 billion, up 2% year-over-year, but market share continues to decline as the broadband segment is only beginning to recover. Wireless remains flat, and other end markets continue to weaken amid cautious enterprise spending. We now examine the relationship between hyperscaler CapEx spending and AI revenue among leading semiconductor suppliers. CapEx spending by the top 5 hyperscalers has increased sharply over time, rising from below $150 billion to over $300 billion, and is projected to reach approximately $600 billion by the end of 2026. Notably, 75% of 2026 CapEx is allocated to AI and data center infrastructure, underscoring the very high strategic priority of AI in long-term investment plans. This trend directly benefits NVIDIA in AI GPUs, AMD in accelerators, and Broadcom in custom AI silicon and AI networking. As shown in the chip and data center revenue chart, NVIDIA continues to lead decisively, with the strongest revenue growth driven by its dominant GPU position, supported by an estimated backlog of approximately $500 billion, reflecting broad, market-wide AI demand. In contrast, Broadcom, AMD, and Intel serve as complementary infrastructure providers. Among them, Broadcom stands out in custom AI silicon and high-speed AI networking, with an AI-related backlog of approximately $75 billion, concentrated in hyperscaler contracts and offering high visibility for revenue realization over the medium term. We now turn to Broadcom's infrastructure software business, with VMware Cloud Foundation, VCF, at its core. VMware previously commanded approximately 70% of the on-premises virtualization market, before Broadcom executed a strategic shift to a subscription-only model, lifting average list prices by roughly 300%. Under this strategy, VCF has been repositioned from a standalone hypervisor into an integrated private and hybrid cloud platform. According to Broadcom, more than 90% of its top 10,000 customers have adopted VCF, supported by clear economic benefits, including a 55% reduction in infrastructure costs, a 31% reduction in facilities costs, and a 42% improvement in workforce productivity. Market response has been uneven across customer segments. Adoption has been strongest among large enterprises, where full-stack deployment delivers the greatest value, while small and mid-sized customers remain more cautious, in some cases evaluating lower-cost alternatives for limited virtualization use cases. Infrastructure software revenue was $6.9 billion in Q4 FY25, up 19% YoY, driven by VCF adoption. Bookings exceeded $10.4 billion, improving revenue visibility. Gross margin reached 93%, and operating margin expanded to 78%, reflecting continued progress in VMware integration. Management expects low double-digit growth in FY 2026, with renewals concentrated in Q1. Overall, VCF momentum and backlog growth underpin a durable, high-margin cash flow base, supporting Broadcom's long-term growth and accelerated AI investments. From $18.0 billion in revenue in Q4 FY 2025, Broadcom recorded $12.2 billion in gross profit and $7.5 billion in operating income, primarily generated by the semiconductor segment, $6.5 billion, and infrastructure software, $5.4 billion. The remaining negative $4.4 billion was recorded as unallocated expenses, including amortization of acquisition-related intangible assets and restructuring costs. Total operating expenses amounted to $4.7 billion, mainly driven by research and development, as well as selling, administrative, and general expenses. Broadcom also recorded a $1.6 billion tax benefit during the quarter, largely from one-time tax adjustments, including excess tax benefit from stock-based compensation and changes in the geographic mix of income, which in turn lifted total net income to $8.5 billion, resulting in a net margin of approximately 47%. We now turn to the trend in Broadcom's net income and net margin over recent quarters. Overall, net income has followed an upward trajectory over time, despite periods of pronounced volatility during FY 2024. In particular, Q3 FY 2024 recorded a net loss of $1.9 billion, primarily driven by one-time costs related to the VMware acquisition, including amortization of intangible assets and restructuring expenses, which temporarily distorted reported profitability. Since Q4 FY 2024, net income has recovered materially and continued to improve in recent quarters, supported by strong demand for AI chips, high-speed connectivity, and data center infrastructure, alongside a steadily increasing contribution from infrastructure software as the VMware integration stabilizes. At the same time, net margin expanded significantly, rising from approximately 30% to 47.3%, reflecting Broadcom's favorable business mix and structural advantages, including its leading position in custom AI silicon and AI networking, as well as the recurring, subscription-based revenue model of VMware Cloud Foundation, VCF, which enhances earnings quality and long-term profitability. Next, we examine Broadcom's operating expenses. From FY22 to FY25, total operating expenses increased from approximately $8 billion to nearly $18 billion. Within this, research and development expenses rose from around $4.9 billion to nearly $11.0 billion, representing a compound annual growth rate of approximately 31%, reflecting Broadcom's continued investment in artificial intelligence chips, custom accelerators, and high-speed networking infrastructure for hyperscale customers. Selling, general, and administrative expenses increased from approximately $1.3 billion to over $4.2 billion, with a compound annual growth rate of about 45%, primarily driven by business expansion and costs related to the VMware integration. The remaining expenses, including amortization of intangible assets and other items, increased at a moderate pace, were mainly related to mergers and acquisitions and do not create meaningful pressure on cash flow or Broadcom's long-term profitability. From FY22 to FY25, Broadcom's reported revenue has generally tracked closely with and slightly exceeded market estimates, indicating a high level of stability and strong execution. From late FY23, revenue growth accelerated meaningfully, driven primarily by artificial intelligence chips and the increasing contribution from the semiconductor segment. For Q1 FY 2026, Broadcom guided revenue of $19.1 billion, up 28% year-over-year, with growth mainly driven by semiconductors supported by a large artificial intelligence chip backlog, while infrastructure software is expected to grow only modestly. Similarly, Broadcom's EPS over FY22 to FY25 has remained broadly in line with market expectations, reflecting strong core earnings quality and effective cost control. Several quarters experienced earnings volatility due to one-time costs related to mergers and acquisitions. However, these items are excluded under non-GAAP metrics. Looking ahead, the outlook remains highly constructive as EPS continues to be supported by growth in artificial intelligence chips, a large contracted backlog, and improving cost efficiency. Investor sentiment toward Broadcom's stock remains positive. Based on the latest consensus from 46 analysts, the average 12-month price target stands at approximately $459.90, implying around 30.8% upside from the current price of about $351.70. In the bull case, the highest price target reaches $539, representing roughly 53% upside, reflecting strong expectations for artificial intelligence-driven growth and a sizable contracted backlog. In contrast, the bear case places the price target near $370, suggesting limited downside of approximately 5%. In terms of analyst ratings, sentiment remains strongly constructive. Based on ratings from 53 analysts over the past 3 months, the prevailing view is strong buy. Specifically, 40 analysts rate the stock as strong buy, 10 as buy, 3 as hold, and none recommend sell, indicating broad institutional support and continued confidence in Broadcom's earnings outlook and long-term strategic execution. Thank you for watching. The information presented in this video reflects opinions at the time of publication, is based on sources believed to be reliable, and is provided for informational purposes only. It does not constitute investment advice or a recommendation.